A very good afternoon to everyone who have joined our webinar already. Again, this is Miss Kurt greeting you once again for this week's session of our collective webinar, wherein we'll be specifically tackling about the corporate tax recent publications or the ministerial decisions that was recently released for the previous weeks that we have, which is about the small business relief, registration exemption, and government entities. So again, the first half of this session would be for the discussion of the recent publication, and the second half would be to address the queries or clarification that you would have. So together with me right now is Ms. Mariam and Mr. Mohammed Sharik, who will be addressing your questions on the question and answer portion or the latter part of this session. So as what I have mentioned, we'll be discussing three ministerial decisions, which is first the ministerial decision number 73 of 2023, which is about the small business relief. The second would be the ministerial decision number 68 of 2023, which is about the tax registration exceptions. And the third one, the last one, would be for the treatment of government entities, which is for the ministerial decision number 43 of 2023. Going in with the first one, which tackles about the small business relief for the purposes of corporate tax law. So the small business relief seeks to support startup and other small or micro business by reducing their corporate tax burdens and compliance costs. So this specific ministerial decision was issued in accordance with Article 21 of Corporate Tax, wherein it is mentioned that a taxable person that is a resident person may elect to be treated as not having derived any taxable income for a tax period, given that that specific person have met the conditions that is prescribed in this specific ministerial decision. So the conditions that they have specified begins with the taxable person's revenue threshold, wherein they have mentioned that the revenue, which is the gross amount of the income derived during the tax period for the relevant period or the previous tax period, must not exceed 3 million dirhams for each tax period. So on instances wherein the taxable person's revenue have exceeded this specified threshold, the small business relief would not be available to them. Further to that, they have specified that this specific threshold would be applicable on tax period commencing on or after 1st of June 2023 and would continue to apply for subsequent periods that ends on or before 31st of December 2026. They have also specified that the revenue must be determined basis on the applicable accounting standard accepted in the state. So it is very important to note that the UAE does not have, as of now, its own generally accepted accounting principles, and the most commonly used by the businesses is the International Financial Reporting Standard. So on this provision, the taxpayers are expected to prepare or maintain their proper book of accounts and maintain their financial statement for the purpose of first calculating their taxable income as well as for the determination of the revenue. It should also maintain all the relevant documents and record that supports the determination of this specific revenue. Aside from the revenue threshold, they have also specified additional conditions wherein they have stated that a resident person that elects to apply the small business relief must not be any of the following conditions. So the first one is it should not be a member or a unit of a multinational enterprises group as defined in the Cabinet Decision number 44 of 2020. So multinational enterprises group or MNE group are one or two companies or a group of companies of which some of the companies is tax resident on different jurisdictions or conducting operations in more than one country that have a consolidated revenue totaling or exceeding 3.15 billion dirhams. Aside from that, a resident person must not also be a qualifying free zone person. So once a taxable person have already elected itself to be a qualified free zone person, the small business relief would not be further available for them to avail. The ministerial decision have also specified some conditions with regards to carry forward of tax losses and net interest expenditure. So if any unutilized tax losses incurred in previous tax period where an election to apply for the small business relief was not made may be carried forward to subsequent tax period in which an election to apply for the small business relief is not made. This should be in line with the condition as specified on Article 37 of the Corporate Tax Law, wherein they have mentioned that the amount of tax losses used to reduce the taxable income for any subsequent period cannot exceed 75% of the taxable income for that tax period. Also, they have mentioned that taxable person cannot claim tax loss relief for a losses incurred before the date of commencement of the corporate tax, before a person becomes a taxable person under this law, or for the losses incurred from an asset or activity that the income of which is considered as exempt income. On the other hand, for the net interest expenditure, the net interest expenditure incurred in previous tax period where an election to apply for the small business relief was not made may be carried forward to the subsequent tax period in which an election to apply for the small business relief was not made as well. Again, the condition should be in line with Article 30 of the corporate tax law, wherein they have mentioned that any net interest expenditure shall be deductible for up to 30% of the taxable person's accounting earning before the deduction of interest, tax, depreciation, and amortization for the relevant tax period. So the amount of net interest expenditure disallowed may be carried forward and deducted in the subsequent 10 tax period in the order in which the amount is incurred. So based on these provisions or conditions that I have just mentioned right now, it is clear that upon the taxable person electing itself for the small business relief, some other reliefs like tax losses and carry forward of deductions cannot be made by that specific taxable person. The ministerial decision have also emphasized as or specified regarding the artificial separation of business. So artificial separation or disaggregation is the instances in which some businesses may separate the different elements of their company to multiple separate entities. So this kind of arrangement are usually used by some of the companies for the main purpose of avoiding further compliance or obligations with regard to taxes. But in reality, these different elements are same people, same trade, and being conducted within the same premises as well. So for the purpose of determining whether the business or business activity has been artificially separated, the authority shall consider whether the arrangement was undertaken for a valid commercial purpose, and whether the person carry on substantially the same business or business activity by taking into account some relevant circumstances or information like financial links, economic links, and organizational links. So, on cases where a taxable person elects itself to apply for small business relief, it is very important that that person must take into consideration the general anti-abuse rule that is mentioned on the corporate tax law. So on this specific article on this ministerial decision, they have specified where the authority establishes that one or more persons have artificially separated their business or business activity, and the amount of revenue across the person's entire business or business activity exceeds 3 million dirhams, and such one or more persons have further elected themselves to apply for small business relief. This kind of arrangement would be considered as an arrangement to obtain a corporate tax advantage under Clause 1 of Article 50 of the Corporate Tax Law. So, moving on with the next ministerial decision that they have released, which is the number 43 of 2023, which is concerning the exception from tax registration for the purpose of corporate tax law, wherein they have specified five entities which is exempted from registering on corporate tax law. So the first two is going to be the government entity and the government controlled entity, which is generally automatically exempted when it comes to corporate tax law, until unless that specific entity conducts a business or business activity under a license issued by a licensing authority. This is for the government entity. On the other hand, for government controlled entity is if it conducts a business or business activity that is not its mandated activities. So on this kind of cases, these entities would be subject to corporate tax law, and later on we'll be discussing as well on how the business or business activity of a government entities can be treated as a single taxable persons as well. So the next entities that they have named is a person engaged in an extractive business and a person engaged in non-extractive natural resource business. So extractive businesses are basically those business that is exploring, extracting, removing, or otherwise producing and exploiting the natural resources of the state. Like for example, oil and gas extraction, mining, dredging, and quarrying. So for this two entities, they must make a notification to the ministry in the form and manner agreed with the local government. Some condition has to be met as well, such as the person directly or indirectly holds or has an interest in a right or concession or license issued by a local government to undertake its extractive businesses. So the exemption for these two entities shall not apply to contractors, subcontractors, suppliers, or any other person used or contemplated to be used in the performance of the activity performed by such entities. The last one that they have specified which is accepted for the registration is a non-resident person that derives only state source income and that does not have a permanent establishment in the state. So non-resident persons are juridical persons who are not resident person in the state and have a permanent establishment in the UAE or derive state source income. So as what was initially released or initially published in the corporate tax law, non-resident persons would be subject to corporate tax if it derives a state source income which is attributable to the permanent establishment in the state. However, on this specific ministerial decision, they have mentioned that if a non-resident person only derives state source income and does not have a permanent establishment in the state, such person would be exempted for registering on corporate tax. So on this specific entity, it is very important that the concept for permanent establishment must be clear to them, as it would serve as a key determination whether a foreign person has established a sufficient or enough presence in the UAE to warrant the business profit of that person to be subject to corporate tax law. To further explain how to consider whether a person have a permanent establishment in the state, we would recap the Article 14 as what was stated on the corporate tax law as well. So a permanent establishment can either be a permanent place or a person, or it could be a nexus. So for the first condition that they have mentioned, any fixed or permanent place in the state through which the business is conducted. So this fixed or permanent place can either be a factory, a branch office, a place in which the business of a non-resident person is conducted. So on cases in which such places is only used for like storing, displaying, delivering of good, or keeping the stocks of good for the non-resident person, these kind of places will not be considered as a permanent establishment of the non-resident person. So for the next one, a person has or habitually exercises an authority on behalf of the non-resident person. So this refers to to the person who habitually concludes the contract or negotiates the contract concluded by the non-resident persons. Such natural persons will not be considered if it acts as an independent agent or wherein the presence of the person is a consequence of a temporary and exceptional situation, or whether a natural person is employed by the non-resident person is just conducting activities that are not core income generating and does not derive any state source income. So on this kind of cases, the natural person will not be considered as the permanent establishment of the non-resident person as well. So the last one is going to be the ministerial decision number 68 of 2023, which refers to the treatment of all businesses and business activities conducted by a government entity as a single taxable person. So as what I have mentioned a while back, for the government entity who conducts a business or business activity, which should be conducted under a license issued by a licensing authority, would be subject to corporate tax. So for this specific condition, they have mentioned that the application to be treated as a single taxable person shall include all businesses and business activities conducted by the federal government entities, and such applications will only be made by the representative federal government entity. So the representative federal government entities basically are the ones who's going to be appointed to comply with the obligations as set out with the corporate tax law on behalf of the entities conducted by these government entities. So notifying the authority of any changes on the businesses and business activity must be done within 20 business days from the occurrence of such event. So the changes that is being referred here to are, for example, if there's any new businesses or business activities that is conducted by the federal government entities that meet the conditions under this specific article, and if there is any business or business activity that is no longer conducted by the federal government entity, so this kind of event should be notified to the authority within 20 business days from the occurrence of such event. So the next one is going to be the conditions that they have set out for the local government entity. So the conditions for the local government entity is almost the same as the conditions they have specified for the federal government entity. So they have mentioned that the application to be treated as a single taxable person should include all businesses and business activities conducted by the local government entities, but we have to take note that these businesses must be done within the same emirate. So such application shall only be made by, again, the representative local government entity. Further to that, the authority shall be notified of the appointment of the representative federal government entity, which, as I have mentioned a while back, will be mandated to comply with all the obligations as set out in the corporate tax law and this decision. So the representative local government entity could also be replaced without the discontinuation of these entities being treated as a single taxable person. Again, the notifying the authority of any changes on the businesses and business activity must be done within 20 business days from occurrence of such event. So this includes, again, conducting any new businesses or on cases wherein any business or business activity is no longer conducted by the local government entities. So the start and end dates of the treatment as a single taxable person for these government entities shall start or end from the beginning of tax period, whether it is specified in the application that is submitted to the authority, or from the beginning of any other tax period determined by the authority itself. Aside from that, the treatment as a single taxable person shall end from the beginning of tax period in which the condition as applicable are no longer met. Like for example, the conditions that I have specified a while back will not be met by these entities. Therefore, their treatment as a single taxable person shall be ceased. So the last article which is mentioned on this ministerial decision is with regards to calculating the taxable income. The representative federal government entity or the representative local government entity shall consolidate or total the financial results, assets, and liabilities of all businesses and business activities attributable to the single taxable person for the relevant tax period, further eliminating the transactions between the business and business activities of the government entities within the same single taxable person. So the taxable income would be computed based on the consolidated financial statement that they would be having. So that is to recap the recent ministerial decisions that they have released with regards to corporate tax law. So we'll now be taking the questions that you have on the message box. Or you can leave any queries or clarifications that you have if you have any, and our team would have it addressed. You may now send the questions and clarifications that you have. Our team would have it addressed in around 2 to 3 minutes. The first question that we would be addressing would be from Jason, wherein he asked the taxable period is for our VAT filing period each quarter or one financial year revenue. So the tax period that we are mentioning is the financial year or for each financial year that your company would be having, not for the VAT filing period or the quarterly period that you are doing for the VAT. The next question is from Fazal Biggs. So we don't have threshold of 375,000 dirhams to pay 9% tax anymore. Instead, it is 3 million dirhams now. So for this specific ministerial decision, kindly note that the threshold that we have mentioned is specifically for claiming the small business relief. So if the company have a revenue amounting to 3 million AED, then they can claim the small business relief. The 375,000 threshold that you have mentioned is specifically for the tax rate to be applied on the taxable income. We're going to address the question from Jamie Ling, how to determine a single taxable person. So again, the one that we have just recently discussed is specifically for government entities, their businesses and business activity to be treated as a single taxable person. So for them to be treated as a single taxable person, an application has to be made by the government, as what I have discussed, by either the representative local government entity or the representative federal government entity. The next question again from Fazal B. This UAE offshore company has to register for corporate taxes. With regards to the federal corporate tax law, they haven't specifically specified any terms with regards to offshore company, but we can put it that offshore company can be considered as a non-resident person. So if a non-resident person is deriving a state source income and further has a permanent establishment here in the state, then they would be subject to corporate taxes. Mhm.
The next question is social media influencer and freelancer could be subject to tax. So first of all, social media and influencer we will consider as a natural person. So for the natural person will be subject to the corporate tax as a resident person on the income from both domestic and foreign sources. But only insofar as such income is derived from a business or business activity conducted by the natural person in the UAE. Any other income earned by the natural person would not be within the scope of the corporate tax. So it totally depends upon the business activity.
Please let us know if you have any further questions or clarifications that you would like us to address. You can just freely message it on the chat box.
The next question from Mr. Rafiq. There is 3 million revenue mentioned in the latest release for SME support. This is for tax period, whereas the tax period can be 1 month, 1 quarter. Can you please clarify on this 3 million revenue? So basically, 3 million revenue. This is for annual financial year. It's not 1 year, 1 month. So basically, they will check your last financial year based on your books, based on your statement, financial statement. They will check how much is your revenue. If your revenue is less than 3 million, so you can apply for the tax relief, small business tax relief. This is the one condition. Apart of that, there is a other condition, as Ms. Kurt she already explained is the in the previous slides. So this is for the yearly, annually period. This is not a monthly and quarterly period. It's applicable on annually tax period. Yes, it's for annual basis. You need to file the since the corporate tax has to file annual basis once in a year. So it's a tax a year.
Just to add on the conditions that Mr. Sharik have explained, all this revenue should be considered for all preceding years. So if 1 year is breached, or if one financial year the revenue have exceeded 3 million, then this relief can never be claimed again. Next question from Thomas. How does double taxation of corporate income occur? So for this specific question that you have, actually we are planning to conduct one more webinar to specifically tackle about the TRC or double taxation in relation to corporate tax. The next question from Thomas. Does taxable income always equal book income? So for this one, the answer is no. Taxable income is adjusted with allowable and disallowed expenses and the other tax adjustment to reach the taxable profit.
From Mr. Rafiq, what about the income earned by the company through the cross trades? That is shipment from India to Australia, and we are in Dubai, a buyer to India, buyer to Indian seller, and a seller to Australian customer. Shipment not coming to UAE. So let me explain one thing. First of all, a corporate tax is not a VAT. In the VAT, this is out scope of the VAT in such kind of scenario. But in corporate tax, it will be applicable. Since you are going to generate the invoice from UAE based company, so it doesn't matter whether you are earning income from cross border or inside the country or outside the country, it's subject to the corporate tax. But VAT, it's no, but corporate tax, it's yes.
The question from Mohsin Parkar. What are the allowable and disallowable expenses for calculating the taxable income? Actually, for this specific topic, it's a very broad or it's a very long topic, and I think we have covered it as well on the previous webinar. So I do advise you to book an advisory by contacting us on the email ID or the landline as stated on the presentation for this specific query that you have. As there is another question again with regards to the expenses, again, we are planning to have another webinar session specifically tackling about the expenses or expenditure that would be considered with regards to corporate tax. Now, for the next question from Jalpesh Rana, it would be applied for the MCC entity. So corporate taxes would be applicable to businesses conducting an activity within the state. So yes, it would apply for the FTC entity as well. So I think there's no more questions that is being sent as of now. We will now end the webinar sessions. If you have any further queries or clarification, again, you can contact us on the information as stated on the presentation. So we would like to thank you once again for joining the webinar for this week's session. Have a nice day ahead. Covered it as well on the previous webinar. So I do advise you to book an advisory by contacting us on the email ID or the landline as stated on the presentation for the specific query that you have. As there is another question again with regards to the expenses, again, we are planning to have another webinar session specifically tackling about the expenses or expenditure that would be considered with regards to corporate tax. Now, for the next question from Jalpesh Rana, it would be applied for the MCC entity. So corporate taxes would be applicable to businesses conducting an activity within the state. So yes, it would apply for the FTC entity as well. So I think there's no more questions that is being sent as of now. We will now end the webinar sessions. If you have any further queries or clarification, again, you can contact us on the information as stated on the presentation. So we would like to thank you once again for joining the webinar for this week's session. Have a nice day ahead.